How's it going, everybody? It's Stas here. Welcome back to another video. So in this video, I wanted to share with you all my M1 Finance portfolio, going over every single stock I own, every ETF I own as of the beginning of February in 2020. And this is an update to the series. If you guys haven't seen previous episodes to this series, I'm building an M1 Finance portfolio from absolute scratch, zero to however big it gets over time. And I started this back in the beginning of July. So go down below. There's a playlist in the description box. Check out the previous episodes so you can see how the portfolio has evolved over time. And in this video in particular, I want to go over what I've been doing over the past couple of weeks in regards to this portfolio. And let me be honest with you all, and you'll see in a couple of minutes, there's been a lot of activity, depositing money into it, buying a bunch of different stocks, ETFs. So I want to share with you all everything in this video. But before we do, all I ask from you is if you enjoy this video, if you find value in this video, simply go down below for me and hit that like button, and also consider subscribing to the channel if you want to see further content for me, and drop a comment down below. Let me know your thoughts on this portfolio. Do you like M1 Finance? Do you have similar stocks in your portfolio? Let me know down below in the comments. I'd love to talk to you guys and just chat about stocks. So without further ado, let's talk about what's been going on here. So as of right now, beginning of February 2020, this portfolio is worth $1,929. And again, like I mentioned, I started this back in July the 2nd, 2019, and since then I've seen a gain of $90.61, and that's broken down between market gains, which is pretty much just capital appreciation, and earned dividends. And the market gains in this case were $79.37, with earned dividends being around $11.24. And before we get even deeper into this, you all mostly know, if you're actually new to the channel, you probably don't know this, but this portfolio is mostly a dividend growth portfolio. I want cash flow to be accumulated through this portfolio, and I want a growing stream of cash flow in terms of these dividends growing over time, right? That's kind of the whole goal of this portfolio. And I do have some individual stocks that don't pay dividends, but I think in the longer term future, they could potentially pay dividends. And honestly, I want some growth to this portfolio. I don't want it strictly dividends. So as of now, it's mostly dividend stocks, but there are about 2-3, again, that don't pay dividends. But I do think in the longer term future, they could pay dividends one day. So as of now, again, 90 bucks in the green, 14.81 is my percentage return. And if you guys have been paying attention to the markets as of late, the coronavirus has rocked the stock market. The market took a nice 3 to 4% haircut. This portfolio is down about, over the past week, down about 0.64%, down about $12. And you guys can see off the top here, you can see my first position is PhD, and this one's down about 4% over the past, or rather $4, about 2%, 1.3% to be exact, over the past week. So that got hit pretty hard, as the S&P did, and the NASDAQ and the Dow Jones in general. So let's just run through quickly what I'm holding right now in my position, and some, or rather in my portfolio, and some new positions that I added into it over these past couple of weeks. And you can see again, the portfolio value is $1,929. I think the last update video, the portfolio was around $1,100, and you'll see why in a couple of minutes when I go through my activities page. I've been adding a lot of money into it as my goal for 2019, or not 2019, guys. Oh my goodness. 2020 is to add $500 minimum to the portfolio every single month. So first position is SPHD. This is a monthly paying dividend ETF. I love it. It's an Invesco. This is the name of it. Invesco S&P 500 high dividend yield, low volatility ETF. So it has a bunch of companies in it that have low volatility, low beta, right? Typically, these companies here with lower beta, lower beta than the market, which is a 1 beta, these companies move a lot slower than the market, a lot less volatility. So putting money into a fund like this, maybe it'll help you sleep better at night, especially if you are one of those people that can't stomach the volatility. Not saying that I'm one of those people, but again, the premise of this portfolio, the goal of it is for it to be more of a stable cash flow type of portfolio with a couple of growth names sprinkled in, and you'll see those down here. So the next one is Johnson & Johnson. This is about $137 in my portfolio. This is obviously one of the best, in my opinions, dividend companies out there. They're a dividend king. They've been growing their dividend 50 plus years, and this is a health care play. The next one is Altria, ticker symbol MO. They recently got hit after they reported their earnings here a couple days ago. They're down a couple percentage points since then, so I might consider maybe buying some shares here as they are currently trading around $46 a share. And today, the day that I'm recording this video, they're down 2.48%. So in the near-term future, guys, I might buy some Altria. They pay around a 7% dividend right now, which is amazing. So the next one is SPYD. I own this one for a couple of weeks, maybe a month or two at this point. This is a high dividend yield ETF, kind of similar to SPHD, but the only difference is this is not necessarily a low volatility dividend ETF. It's more of kind of a not generic, but a general S&P 500 high dividend yield ETF. So I have 5% in this, and you can notice that all of my stocks here are split between 4, 5, 6%, and the goal of most of them is to be around 5%, and the main holding here is SPHD being around 15%. So not to waste too much time, the next one's 3M. You guys can see, again, 5% of my portfolio. This got hit actually after earnings a couple of days ago, which is why you'll see in a couple of minutes here I bought more of 3M. McDonald's is the next one. Disney is another one here that's new to the portfolio that I've just wanted to add it because this is a company that I view as a long-term stock, a truly lifelong stock, right? You can't really say that about many companies out there. You may think Apple's a long-term stock or a company that's going to stay for 50 years, but the truth is, no one knows really about Apple, right? But for me, Disney, I really think it could be here in 50 plus years. There's a very high likelihood. Names like Facebook, they might not be here in 50 years. PayPal may not be here in 50 years. But Disney, I am sure will be here in 50 years, which is why I want it as a core holding. Not really a core holding, but a holding in my portfolio. So the next one here is PayPal, and although it might not be here in 50 years, I think it'll be here in 5 to 10 years, and I think it's going to grow heavily in these next 5 to 10 years, which is why I want it in my portfolio at 5%. They don't pay a dividend right now, but who knows? They might pay one in the next 3 to 4 years, maybe as their business, gets to maturity, but at that point, I might sell out. Who knows? We just have to wait and see what time brings in terms of PayPal. The next one here is Boeing, ticker symbol BA. This is one that is in danger of a potential dividend cut, but I still wanted to add it to the portfolio due to it being slammed. I'm one of those investors, especially when I'm viewing a long-term horizon here. I'm one of those people that I like buying into companies that are weak, that are seeing some short-term headwinds, and a lot of these companies here, I've bought into them due to that reason. Disney on the short-term basis here, they saw their Shanghai location close due to the coronavirus. This put a lot of pressure on companies such as Disney and really companies that have a lot of people, let's say, interacting with their products, like Carnival Cruise Line. Obviously, their product is the cruise line, that whole experience. A lot of people don't want to go there because they're going to get maybe the coronavirus now that it's spreading. Who's going to go to Disney in Shanghai when the coronavirus is spreading? Not many people. So I saw this short-term headwind as a potential buying opportunity, and I bought up some Disney. AbbVie here is seeing a bit of a dip. I think it's about $80-something now, $82. So I've been buying a little bit more of that. This portfolio, it's really focused on the long game here. I'm not nitpicking my entry points like I am when I'm trading stocks. I'm really just buying on a consistent basis, trying to accumulate a good amount of each of these different companies that I truly believe in the long term. So O is the next one, Realty Income. This is a monthly paying real estate investment trust, and this, guys, is really a bread and butter real estate holding, in my opinion. REIT, REIT. Again, they pay monthly. I bought some at about $76, saw some value down there. Now they're trading back up to $78, but I really just wanted some exposure to real estate. As you guys can see, McDonald's arguably is a real estate company, but just wanted some further exposure there with an actual REIT, real estate investment trust, ticker symbol O, Realty Income. So the next one here is Amazon. They've been crushing it. They killed earnings a couple days ago. Ever since then, the stock is up like crazy. Next one is Wells Fargo. This is another one that is seeing some headwinds here. A lot of pressure since their scandal back, what was it, in 2018, late 2018, early 2019, whatever it was. Ever since then, guys, this stock has been getting hit. Right? And I believe in it long term. I think there's potential in it. I want some exposure to banking. They pay a 4.5% dividend yield. They're growing their dividend quite nicely, so I figured why not add a little bit to Wells Fargo, scale in over time. So the next one here is Facebook. No need to talk about that. All of you guys know what that is. This is just a growth play that I want in my portfolio at 5%, and that's it, really. I'm putting it in here, and I'm riding it long term. Next one is Duke, ticker symbol DUK. This is a, what's it called? A utility, guys, a regulated utility, and I bought this at the right time. Let me tell you, because before this whole outbreak of the coronavirus, Duke was trading at around 90, 91, 92 bucks. And since many people view utility stocks, kind of as a safer play, this started to rise up when the markets in general were selling off, and you can see my average share price is around $93 per share. So these last three, you can see VEA is a developed markets, international markets ETF. This is more for global exposure. And they also pay a pretty nice dividend, if I'm not mistaken. GLD, this is a gold trust. This is really to hedge against my, long positions here, the dollar, the economy in general, just to have some exposure to gold. I'm a firm believer of having some gold in your portfolio, at least 5%, maybe 5-10%, during any specific time. And as of right now, mine is around 3.5%. So I may be adding a little bit of gold here, especially if these markets in general continue to fly up. I'll probably accumulate some more gold. And my last holding here, which I haven't really bought any of in recent history, is AT&T, ticker symbol T, and this is currently 2.7% of my portfolio, goal of a 5% stake. But to be honest, guys, AT&T right now, I'm not really liking their value at around $38. I started buying this one very low. I actually sold out of a lot of it, locked in profits due to valuation, and I'm really just holding the remaining shares that you guys can still see here in my portfolio. And I'm still going to hold it because it's around a 5 to 6% dividend yield. That's what it gives out right now. But if there was another stock that came along that came to the right value and I wanted to put it into my portfolio and I had to bump out any other stock, the stock would be AT&T, the one that I'd bump out, and then I'd add, of course, that new one into the portfolio, and of course, I'll let you guys know what that is. So now that we went over every single holding in my M1 portfolio, let's go over quickly before I end off the video the deposits I've made over the past couple of months, the trades I've made, as well as the dividends I received. So in January, I believe I deposited $700 into this account, and again, the goal for 2019 is every single month a minimum of $500 into the account. So the fact that I did 700 and I already have $100 in February, so that's $800 over the past couple of weeks. That is really, really good. I'm exceeding my goals, which is what obviously I wanted to do. And let me double check that. So 200 plus 100. Let's do some basic math here, guys. Basic. I'm not Mike Tyson. Basic. 200. Oh my God. 200 plus 100. That's 300. Plus 150. That's 450. Plus 50. That's 500. Plus 200. That is $700 in January. That is fantastic. So dividends only. Dividends, didn't receive too many. I received about $2.50 worth of dividends from Altria and from SPHD. And mind you, this is a small portfolio. The idea is not to get a ridiculous amount of dividends now, but to reinvest these dividends and get a ridiculous amount of dividends in 5 to 10 years from now, right? And January is typically a very slow month for dividends. I looked at my payouts for March. I'm getting 10 payouts in the month of March based on the holdings that I have now. I believe 5 or 6 in February in terms of individual payouts. So January slow, about $2.50. And to end off the video, let's talk about my trades in January. Again, I made a lot of trades. I put $700 into the account, and every penny of that was invested in January. So on January 8th, I bought a bunch of Boeing, GLD, McDonald's, SPHD. I bought a little bit of AT&T there, although I did say earlier in the video I didn't, so I guess I was wrong on that part. That's what happens when you buy a bunch of stocks all the time. You kind of forget what you do end up buying, at least in these long-term accounts where you're buying a lot at once, a lot of different names at once, right? So $160 that day, another 45 this day, and you can see the whole goal is to just buy over time, dollar cost average. You don't have to time every single move, and that's the goal of this portfolio, and that's kind of how I'm trading, not really trading, investing during this coronavirus, during this volatility. Not much has changed. I'm just continuously buying and buying and buying. As you guys can see, even in February, today, I literally bought another $100 worth of stock as the markets did take that little haircut that we talked about. On the 27th of January, I bought, $200 worth of stocks across 7 different holdings. So that's kind of what I've been doing, guys. Just putting money in every couple of days, $100 here and there, and just investing it, putting into individual stocks, ETFs, putting some into gold so I could hedge against the market to play it safe on that, aspect. And that's just how I'm approaching this in the whole year of 2020. So that's it for this video. I hope you all enjoyed it. If you did, feel free to go down below and hit that like button. And also consider subscribing to the channel if you want to see further content from me. And don't forget to check out the M1 Finance playlist series, the series playlist. That is linked down below in the description box, as well as my affiliate link with M1 Finance. It's nothing crazy, but if you do sign up with M1 Finance and deposit your first whatever amount, doesn't matter, you actually get $10. So if you want free $10 and an awesome brokerage that I really love and that I'm using, you can get that down below in the description box. So I'll catch you all in the next video. Thanks again for watching. As always, peace out.